This is a special podcast presentation from 700WLW.com. This is Darryl Parks On Demand.
6 after 10 on the big one, 700 WLW. I'm Darryl Parks. Porter Stansbury of Stansbury Research joins us this morning. In fact, you may have seen Porter's video, or as he said, call it as I call it, a PowerPoint presentation online. It's entitled "The End of America," and it all hinges upon the U.S. dollar being replaced as a global currency. And Porter, I put on my Facebook page that you were going to be joining me this morning, and it's amazing the amount of people that came out and says the guy's a quack. In fact, one guy who was a longtime friend of mine wrote on my Facebook page. He said, "I never thought of you as a member of the aluminum foil hat crowd, Darryl." And after watching your video and doing some research, not only on you and your organization, but what you say makes a lot of sense.
Yes, there are no aluminum foils on my head. I'm just looking at the balance sheet and the deficits of our country, and I'm trying to figure out why our foreign creditors will allow us to print dollars and pay them back.
Mm-hmm. Now, tell us a little bit about the U.S. dollar being the global currency, because I think there's certainly been news about this. And to your point, just on Thursday, the IMF, the International Monetary Fund, issued a report suggesting that the dollar be replaced as the global currency. But when people see this, they really don't have an understanding of why it's so important that the U.S. dollar remains the go-to currency on the planet.
Well, it's a great edge for our country economically, because we're literally the only country in the world that can legally print money. So every country in the world, when they're buying oil overseas or when they're trading their products, when China sends us goods, we're paying in dollars. Mm-hmm. The dollar is the currency of all global trade. And that privileged position was given to us basically after World War II, because every other major country in the world was essentially bankrupt at that time. Mm-hmm. So they needed to use our currency because it was the only one that was accepted widely all around the world. And so it's sort of an accident of history, if you will. And as long as our currency was sound, as long as we were running deficits that were in control, and as long as we were doing the right things economically, our trading partners were happy to continue to accept our currency. The big risk now is, Darryl, is that even if you were to double our tax receipts in the United States, we would still be running a deficit. So the amount of our deficits is out of control, and that's putting enormous pressure on the value of our currency. And as our currency falls, more and more trading partners become unwilling to use it.
No, it's a basic law of supply and demand. The more money that the U.S. government prints, it basically waters down its value.
Of course, and one of the interesting things is, I think most Americans realize that what I call banana republic finance is not in the tradition of America, right? I mean, there's a reason why Zimbabwe isn't the richest country in the world. And it's because, they've destroyed their currency so many times that no one wants to invest there, no one wants to do business with them, etc. And the same thing happened in Central and South America for many, many decades, right? I mean, these countries and their economies were laughing stocks because all they did was destroy one currency after another. And the sad thing is America is now doing exactly the same things that we would mock people for in the past. Everyone knows you can't go out and print $2 trillion and there aren't going to be any negative consequences. And that's exactly what we've done.
Well, to put it in maybe terms people could understand, printing money, isn't that akin to a Ponzi scheme?
It's exactly a Ponzi scheme, except for the only difference is you can't know exactly when it's all going to fall apart. With a Ponzi scheme, you can kind of map out, as soon as I get to this certain point, I'm not going to be able to pay people and it's going to collapse. And the question with currency is it really just depends on how long are people going to continue to accept it. And we can't know the answer to that question. We can just know that there's more and more pressure on us to stop doing what we're doing, and there are more and more trading partners who are saying, "Hey, this isn't really fair. I lent you this money when it had a certain value, and now the value has dropped precipitously, and now you're printing more of it to pay me back. And hey, that's not such a good deal for me." And so, you're seeing this more and more. You're seeing the Saudis talking about implementing a gold-backed currency. You're seeing the Russians saying, hey, we don't want to accept any more dollars. And now you're seeing the IMF talk about the need for a more stable global currency. These things are all going to be tragic for Americans who hold their savings in dollars.
Mm-hmm. Well, a lot has been talked about. We tend to point fingers at China, and China's one of the countries and that holds debt on the United States. But to your point, you just mentioned one of the other countries. I believe the second country that holds the most debt on America is Saudi Arabia.
Actually, it's Japan.
But Saudi Arabia is right up there.
Saudi Arabia has been a big supporter of the dollar. Our relationship with the Saudis is we've always provided for their security. In exchange, they've always sent us their oil, mm-hmm. and they've always been a backer of the dollar. But you saw what happened in Egypt. You saw what happened in Tunisia. And one of the big fears I have is if there was to be some kind of regime change in Saudi Arabia, there's no doubt in my mind that the special relationship that the Saudis have with us would change, and I don't believe that they would continue to accept the dollars anymore, and that could be devastating for the American economy.
In the news, we always hear about the United States and the deficit that the government runs, and certainly spends a hell of a lot more than it takes in tax revenue. But people really forget about what the debt is, and the debt is a hell of a lot more than that. And I've seen numbers $50 trillion plus, $55 trillion plus, and that is the true debt that we owe.
Yeah, there's a lot of misunderstanding about these debt numbers, and the one that I'd like for people to understand is not just the federal debt, because that's not all the money that we owe. We also owe money to state and local government. State and local governments are also in debt, so there's more government debt than just the federal debt. And of course, more importantly than that, then there are personal debts, things like mortgages, etc. And all that stuff, when you add up the total amount of money that Americans owe to somebody, the total number is $55 trillion. And why that matters is because that's about $600,000 per family in the United States. And if you look at what that costs in interest payments to maintain, it's about $40,000 a year in interest. But the average income in the United States is only about $50,000. So it just gives you an idea that, in general, our society is woefully in debt, and that we have borrowed so much money that it's going to be very, very difficult for us to get out of debt because we have to spend so much on interest. Mm-hmm. And my big fear is that typically when societies get into this situation, the way they get out of it is by printing a lot more money, which reduces the burden of the debt. And that might sound great if you happen to be heavily in debt, but it has really nasty consequences for anyone who's holding the currency.
All right, Porter Stansbury is of StansburyResearch.com. And Porter, you're a financial analyst. You don't deal with people's money.
No, I'm strictly a researcher.
Okay.
I sell investment research. I don't manage any money. I'm not paid for. I'm not an employee of a bank or a fund.
Okay. Well, Porter, what's going to happen in your video? You predict some pretty dire things happening to America, and if this. For instance, if the dominoes start to fall and the U.S. is replaced as a global currency, what are some of the things that could possibly happen in the United States to lack of a better way of putting it, really change our lives?
Well, I think the most basic thing to understand is that if a currency falls apart, what generally happens is that people just refuse to accept it. So if you wanted to go buy gasoline, for example, it might end up costing you 5 or 10 times as much money as it used to, or you might not be able to buy it at all with the paper currency. You might have to trade something for it in barter, or you might have to have gold or silver to get it. And so that's really my concern, is that there could be a crisis where people are so afraid of the declining value of the paper money that they simply will refuse to accept it. And I understand that this sounds a little bit extreme and that people have a hard time accepting that is a possibility in the United States. But it has happened many, many times over the last decades in many rich and industrial nations, places in Europe, Argentina, for example, which used to be one of the richest countries in the world. So it can happen, and one of my fears is that people have a mindset that it could never happen here, so they won't see the risk of it developing.
Mm-hmm. Well, you bring up gasoline, but also food prices. And this past week, there was a story about there being a shortage of corn and soybeans, a worldwide shortage. And I started off the segment saying that I posted this much of your information on my Facebook page. And an individual that works at Kroger, the supermarket chain, which is headquartered here in Cincinnati, put on my Facebook page, he said, hey, food prices are going up and you ain't seen nothing yet.
That's exactly right. Darryl, I was invited to a private meeting of the senior executives of the world's largest food companies. And I'm not allowed to name names because it was a private meeting, but there were executives there from companies like Bunge, companies like Crises, which is a major soybean producer, companies like Monsanto. So there were just basically the global bigwigs of the largest food companies in the world. And this was last November. And they told me in no uncertain terms that given various government regulations, they cannot produce enough food to meet demand right now, and that because of the weakening of the dollar, that food prices were going to go through the roof. And, of course, that's exactly what we have seen over the past 4 months. And I wrote this all up, by the way, in my newsletter. So, I mean, I don't want people to think that I'm a rear-facing analyst, that I'm just looking at the past and then making predictions based on it. This is exactly what's happening right now, and this is a sign of the problem that we have with our currency, and unfortunately it has devastating consequences already for people around the world. What I'm trying to do, Darryl, is to get people to realize that this is not just a foreign problem, that these problems are going to come back to hit us in the United States as well. And the root cause of it is that we are devaluing our currency by massive amounts to finance unsustainable government debt.
Mm-hmm. To your point earlier, the U.S. government is printing money. To me, one of the biggest fears, and we have this here in the state of Ohio, which is upside down on its budget by $8 billion. You have states like California that they would be praying that their deficit, their state deficit would be $8 billion. You have states like Illinois that was the focus of a story on 60 Minutes about not being able to pay its bills. And when you start seeing some of those states default, because they can't print money, and many of these states are and hell, the old governor of the state of Ohio, one of the comments, and this just blew my mind, when talking about balancing the budget in the state of Ohio, said, "Don't worry about it. We'll get money from the federal government." And number one, that's not leadership. But number two, that's not realistic.
No, a lot of these states that have the biggest budget problems are heavily Democratic. What I mean by that, of course, is that the Democratic Party has controlled the state houses for a long time. And as you well know, the most recent election in D.C., Republicans took control of the House again. And I think it's completely unrealistic to expect the Republican House that was elected to cut the budget to bail out these Democratic politicians in the various state houses. I think it's very, very, very unlikely. And I think it's going to be tragic for investors who don't see these risks coming. By the way, the largest holder of municipal debt in the country is Citigroup. So you're also looking at perhaps another round of Wall Street bailouts, because as these municipal bonds go bad, it's going to impact the balance sheets of the banks once again. And so what's the solution going to be when that happens? Are we going to have to print yet more money to pay for the bad municipal obligations? I mean, at some point you see this pyramid of problems that are coming from one root source, which is that we have way too much debt.
Mm-hmm. All right. Well, Porter, I certainly appreciate the information this morning. I have your video linked on my blog page at 700WLW.com. And what you say here is some pretty scary stuff, but it's also all common sense.
It really is. If you just look at the numbers, I do this a lot to people who say that I'm exaggerating these risks, and I say, okay, great. Well, just show me with the numbers how we're going to repay $55 trillion. Explain to me in the context of our economy how we do that without greatly devaluing the dollar. And, of course, there is no answer to that question, and that's the scary part.
All right. Porter, have yourself a wonderful weekend.
We will. Thanks, Darryl.
Okay, take care. Porter Stansbury, and as I said, you can go to my blog, 700WLW.com, search the word Darryl, and the link to his His online video is there, and also his organization, StansburyResearch.com. We'll have a look at the warm weather forecast in just a moment from Fox 19. It's 20 after 10. I'm Darryl Parks, 700 WLW. What warm weather means, oh, yeah, people holed up in their houses all winter long in this cold weather, and later on this week it's going to be in the 60s. That means if you drive down Eastern Avenue, all the pasty white guys come out of their houses with their big beer guts without shirts on. Oh, yeah. Either that or wife beater T-shirts. Here's the Storm Tracker forecast from Fox 19 for today. Partly drive down Eastern Avenue if you think I'm kidding. Partly sunny today with a high of 40. Tomorrow, pretty much the same, a high of 47, as I mentioned, in the 60s by later in the week. Currently 33, 700 WLW, and here's Chuck on the big one. What's going on, Chuck?
Hey, good morning, Darryl. Hey, I've been a financial advisor for 30-plus years, and what that gentleman was talking about, if people think that he's making this up or he's some type of a con man or he has some type of an agenda against the current administration, they are sorely mistaken. Everything this gentleman said is hitting the nail on the head except for two very, very small minutia points. Number one, the largest owner of U.S. debt 3 weeks ago became the United States itself because we actually have been printing money to purchase our own treasuries.
Correct. It's the Federal Reserve, and to Porter's point, I was checking some of his facts yesterday as well, Chuck, and to his point, China is dumping U.S. debt.
Right.
Yeah.
So that's but we own. So in other words, we are printing money to buy our own treasuries. That's number one. Number two, when it comes to food, if anybody wants to know where the price of food's going, you have to look at the fertilizer companies. Look at the Conagras, the potash. They're skyrocketing. And the one way of getting out of this mess, if you go back to Grapes of Wrath with the dust storms, that was a farmers-created error where they did not rotate crops and so forth. But we are paying every year farmers to not plant. And if we take that money away, which is an expenditure which would reduce our debt somewhat, and get farmers to plant all that. The reason the federal government started to pay farmers not to plant was to guarantee a price to make it profitable for farmers to plant. Because if they planted on all the land available, the price would just go down through the floor, and every farmer would be out of business. But in today's economy, you got what they called the tortilla wars in Mexico because you had riots down there because we're now burning our food for ethanol, and there's not enough corn to go down to Mexico, and that's why the price of tortillas tripled down there, and they had all that uprising.
Chuck, it's interesting, and you bring up a great point. When I heard the story earlier this week that there's a shortage of corn and soybeans on the world market, and this is because of demand happening in China and countries like that, developing countries. And I started thinking to myself, well, what the hell do we grow in this country? We grow corn and soybeans, and
two largest crops.
Yeah, and to your point, and my point on this, and I start visualizing driving between Cincinnati and Columbus, where just a few years ago, driving up 71, all you would see is beans and corn growing on both sides of that interstate. What do you see now? You see vacant farmland.
Yeah,
it's not grown anymore.
You used to see also what they used to call winter beans, where you would have farmers actually plant two crops in 1 year.
Yeah.
Yeah, all we have to do is no longer pay farmers to not plant and to shut down land and keep the farmers. They have to rotate the crops so we don't have another Grapes of Wrath situation.
Yeah, but also to your point, Chuck, what has happened with farming is fertilizer has increased the yield per acre. So it's not only about rotating crops.
Absolutely.
Yeah.
And one last thing, if I may.
Yeah.
The situation with the gorilla in the room that nobody wants to talk about is that farmers every day through these estate taxes that we have, when the farmer dies, the wife can't pay the estate tax. That's if it comes back. And they end up selling that farm to a conglomerate, and we're going from a country of many, many individual farmers to a country of few gigantic farms.
Oh, I'll tell you what. It's down to almost one company, and it's not a monopoly, so to speak. But it's as far as a company that has its fingers in food and food production in this company is Monsanto.
Yeah, well, when the people talk about the estate tax and they say, "Oh, that's only for the millionaires," no, that's for that pony keg owner around the street from you. When he dies, his wife has to end up selling the pony keg because they can't pay the tax on it.
All right, Chuck, we're going to have to run, buddy.
Have a good one, buddy.
You too. Enjoy the weekend. 10:30, a little bit late for the news here. Brandy standing by. I'm Darryl Parks. One open line at 513-749-7000. Into the bunker. 700 WLW. 700 WLW. I'm Darryl Parks. Eric Dieter's on the way at 12:06. Today we have basketball action tomorrow afternoon as UC takes on. Does it really? Who are they taking on again? St. John. Doesn't really matter. Anyway, tomorrow at 11:33. If you head to my Facebook page, facebook.com, look up Darryl Parks. You can follow along. A lively discussion today. I just threw out a comment this morning about it getting warmer, and thank goodness we're having our spring thaw, or an early thaw, I should say, February thaw, and people driving with their tops down tomorrow. It turned into a conversation on boobies. I kid you not. So anyway, become my friend on Facebook, facebook.com. Look up Darryl Parks. Also, the guest, a lot of response here coming in on email, and also people lined up to talk about it with Porter Stansbury of StansburyResearch.com. The video I'm talking about is linked on my blog, 700WLW.com, and search the word Darryl. It's amazing. A lot of people will think that someone like Porter is a quack. And I beg to differ. This guy is an analyst. He is not managing money. He is an individual that is looking in a common sense way at what is happening to our financial markets, also happening to our economy, and happening to the dollar. We all know and we all can agree that government is spending more than it is taking in. And just bring it down. See what ends up happening is the politicians tend to try to confuse you. And they tell you things in numbers you can't conceive of. $1 trillion is a theory. There has never been $1 trillion of anything sitting in a room. It's an accounting theory. So it's a $2 trillion, $1.5 trillion, and Obama did this, and Bush did that, and $55 trillion. See, that's the real number. That's how much debt is owed by the U.S. government. And then you start putting on the pile the states. 46 out of the 50 states are broke. Broke. Can't pay the bills. Not taking in enough tax revenue. And then pile on the counties. And then pile on cities like Cincinnati that can pay its bills. We're in deep, deep, deep trouble. And then, let's take a look at the post office, shall we? This past week, the U.S. Postal Service has said and warned that in 2011, it will default. Default. No longer can the U.S. Postal Service pay its bills. It will lose billions again this year. Yet there are those that cry and wail and whine about 6-day-a-week delivery, which we don't need. The Postal Service, in defense, has tried to cut expenses, and they have cut a lot of expenses. But this says everything about the U.S. Postal Service. And it shows you how the U.S. Postal Service is delusional. It's not even denial. They're delusional. In this article from CNNMoney.com, on the bright side, the Postal Service says improving economic conditions suggest the worst of the precipitous volume decline during the recession is over. Let me translate that. They are saying their business is going to increase because they're thinking email growth will stop. Delusional. No one wants to do and make the hard decisions. And we are heading toward the edge of the cliff quickly. And there are those that think people like Porter Stansbury are crazy. I don't think so. This guy's got no dog in the fight, so to speak. He's not managing people's money. He's just doing research and selling it. 19 in front of 11, 700 WLW.